Well, folks, on a day like today, there's a lot of money being made out there. A lot of brokerage accounts are in the green today, and in the green very nicely. Markets up big, a lot of stocks up big, and folks are feeling real good. And I'm even seeing some folks say that's the end, okay? We reached the bottom of the, let's call it the small cap stock crash. And I just want to caution folks here, okay, in this video. I'm going to show you what we still have to go through over the next several weeks. And to be honest, I would not celebrate yet, okay? Let's just put it that way. We got a lot to go through in today's video. Hope you guys enjoy this as always. And make sure you subscribe to this channel because we got more drama coming. I can promise you that in the stock market, and a lot more stock-related videos coming. So make sure you hit that subscribe button. It's absolutely free, okay? So everybody's looking at the Russell 2000 today, up over 2%. They're feeling good, right? They're like, yes, Russell back up over 2,200. I mean, you go back to February, the market was at, as far as the Russell goes, market was at 2258. So literally the Russell hasn't done anything basically this year. And folks are looking at this and they're like, my gosh, you know, meanwhile the Nasdaq's had a good year, Dow's had a good year, S&P 500's had a good year, and Russell basically hasn't done anything. And look at it, I mean, it's literally down since February. And so we've seen the devastation with small cap stocks. We've seen the devastation with anything super high growth that is a money loser on the bottom line. We've seen the devastation in anything that is seen as somewhat speculative in the market. We've seen it, okay? And so a day like this, a lot of folks are feeling like, hey, this is the end. This marks the end. The Russell moving up 2% here. Okay, not quite. No, the Dow is obviously up big today, 646. S&P 500 up 1.17%. VIX shot way lower. Nasdaq up almost 1%, but it is interesting how much the Nasdaq underperformed the Russell and underperformed the S&P and the Dow Jones. Remember, a lot of the big tech has been what has carried this market, right? Apple, Microsoft, Google, stocks like that have been what's carried this thing. And remember, the top 10 biggest, when you're looking at that NASDAQ number, that's NASDAQ 100. Of the NASDAQ 100, over 55% of the weight is in the top 10 stocks. So the biggest of the big dogs, they're what controls the market, and they make the market look like, all the indexes at least, they make it look better than what it's actually has been going on this year, when a lot of us are like, man, we've been buying these stocks for several months now, and they've just continued to get devastated and devastated, and we're like, what in the heck, okay? Because money has been hiding out in big tech, right? I showed this in a video recently on Financial Education 3, the Fear and Greed Index, right? And we went in, at that time, the extreme fear was at actually a 20 at that given moment, okay? The previous close was at a 20, right? We're still in extreme fear at 25. We're just not in as extreme fear, right? A day like today helps the Fear and Greed Index out, right? If you go back a year ago, we were at an 89. Extreme greed, like, 100's where it maxes out as. So if you're getting up to an 89, you were in extremely greedy territory. And we remember December of 2020, January of 2021, and into the beginning part of February 2021, that was when greed was at its highest. Just insane greed was in the market, right? And right now, about the only thing that's extreme greed is junk bond demand. So needless to say, stay away from junk bonds. If you're thinking about playing with junk bonds, which is probably no one watching this video, hey, yeah, don't mess around with junk bonds right now, okay? That is in extreme greed territory. Basically, everything else is in extreme fear territory, okay? Now, I've been pulling this up recently. I've been showing everybody S&P 600 small caps have been trading extremely low. This is based upon the 30th. It got even lower than this, right? Small caps just trading very, very low on a forward P basis versus where we've ever seen it. I don't really pull this up too often, but this is the PEG ratio, okay? Price to earnings growth, S&P 500. So basically, normally you can expect to pay, for a PEG ratio, somewhere around a 1.25-ish, somewhere around there roughly, right? I mean, there's times where we get much above that for a PEG ratio, time where we get much below that, right? Obviously, in the great financial crisis, we got below that. In the double dip recession talk of 2011, we got, way below that, right? And if we go back to December of 2018, we also got below that, right? I'm talking about substantially below that and below a 1, right? Now, this was as of the 18th, we were trading at a 1, but recently we've gotten even lower there, okay? If we go up, and look at this, right? Consumer discretionary trading at a 0.7, industrials trading at a 1.3, consumer staples trading a little bit rich, but not rich based upon modern times, just rich based upon like 2006 through kind of 2013 time. Information technology is, kind of up at the upper ranges there. Energy insanely low at a 0.2 price to earnings growth there. Materials very low. So you get this conflicting data. And by the way, this was all taken on the 25th of November. So we're actually lower in most of these than where we're at, essentially, where it's showing at here. And so if you're looking at this here, price to earnings growth is pretty darn low, just based upon historical standards. Like I said, I think we're under a 1 right now, I believe, okay, because we were at a 1 on November 18th or whatever that was when it showed it, and since then we had gone down. So yeah, we should be under a 1 for price to earnings growth. So this is one of those conflicting data points where you look at it and it's like, oh my gosh, we're actually extremely low for price to earnings growth, right? Now, we have a lot more to go through, okay? Remember, tomorrow is going to be December 7th, which means we still have a lot of December to go through. We still have a lot of drama to go through, okay? We got the CPI report coming out at the end of this week, right? We got Fed meetings coming out next week, and the Fed is just that perfect excuse to drop the markets, right? Oh, the Fed says this. Oh, the Fed's going to do this. And there's all you can always twist the Fed into a negative light if you want, right? It's really up to the eyes of the beholder, but you can always twist what the Fed's doing as a bad thing, right? If they want to keep rates low, you could say that's bad because maybe they're scared about the economy, right? If they want to raise rates, you could say that's also bad because it's like, oh, they're going to raise rates, so the whole economy is going to drop, the company earnings are going to drop, it's harder to issue debt, anything like that, right? So it doesn't matter what the Fed does or what the Fed says, the market, if the market chooses to, it can take it as a negative, okay? And so this is something very, very important. It doesn't matter what they say, doesn't matter what they do. If the market wants to take whatever the Fed does as a negative, it can, and it's an easy excuse, okay? So that's going on next week. You're going to have Roni numbers coming out the last week of December, which are probably going to be elevated. Think about it. A lot of people getting together around the holidays. And what happened last year, the numbers in the end of December into January jumped really high. A lot of us are over the Roni numbers, but the market, whenever the market wants to all of a sudden throw Roni up there, right? Oh, a new variant or the numbers going high, it wants to, right? It just snaps its fingers and it's like, hey, let's all pay attention to the Roni numbers now, right? So you're going to have that going on. And then there's still more tax loss harvesting to be done. And I'm going to show you something here in a minute that's very, very important, okay? I mean, I think a lot of folks have jumped ahead when it comes to tax loss harvesting. I think a lot of that, I don't want to say, all of it's done, because certainly not all of it's done. And we even saw some proof today that it's not quite done. But I think a lot of people jumped ahead. However, there's still going to be more tax loss harvesting going on. I think a lot of people just jumped ahead so they could start buying again at the first week of January, okay? Whereas some folks wait till very, very last minute. Some funds wait till very, very last minute for tax loss harvesting. And that can still play out over the next few weeks. And remember, the stocks that are the most devastated, this just is an extra pile on. It's just a cherry on top to destroy those stocks even more and more and more, because you have so many folks selling. And even though some of those folks are going to buy back in January and February in regards to these stocks, right? Like, it's still, at the end of the day, when you have that much selling pressure, and you have a lot of folks saying there's probably going to be more selling pressure over the next few weeks, it gets hard to push up those stock prices in any meaningful way in the short term, which then you're waiting for that money to flow back in January and February, right? And so very, very important that we still have several weeks of possible, tax loss harvesting go on. And the stocks that are the most devastated are the ones that people really like to take the tax loss harvesting, because that's where you get the, if you had big gains this year, you can write that off against those big losses, right? Then just go ahead and buy the stocks back, all right? So as in regards to today, this was a day I actually took off from buying. I've been buying extremely heavy, almost day in and day out recently. I didn't buy one stock today. This was just a day I took off, okay? The reason being is, first off, there were a lot of stocks that had big upward moves. This is the first part, right? Baba was up, 10% plus today. Uber was up 7% plus. I think there's some real interesting stuff going on with Uber. I'm going to share that at some point in time. We'll get to Uber, but they got some stuff going on that I think is really big for their long-term TAM. Sam had a really good day today, up about 7%. That's been one I've been buying recently. The Planet had a really good day, up over 6% with the Planet. Win had a good day, 6%. Smile Direct Club had a good day, 5% upward move there with that one, right? BYND had a nice bounce back day, 4%. Purple, which is a stock I'm looking at very, very seriously, listed our conference call twice now, up 3.8% here today. Walgreens, one of my bigger positions, had a nice day today, 3.8% upward move. The FB had a really nice move here today, 3.5%. Honest had a good day, 3% there. Funko, one I'm just been kind of looking at, and not my favorite stock, up 2.7% there, okay? But needless to say, I wasn't really doing any buying here today, okay? And I also have something to share with you guys that's maybe a little worrisome, okay? And the reason being is like a lot of stocks I am interested in buying, right? Either opening positions for the first time in or, thinking about averaging down on. A lot of them weren't, basically what this showed today is these stocks are likely still going through massive amounts of tax loss harvesting, okay? And so you look at something like Corsair, it had showed strength, but it ended up dropping toward the end. That's one that I think just, everybody's down on Corsair. So this is one of those days I think a lot of folks look at and they say, okay, Corsair's having a decent day today. Who's to say it's not going to drop again over the next several days, several weeks? Let me go ahead, take the tax loss harvesting today, get ready to buy back in, at the beginning of January. Because if you sell on a day like today, December 6th, you can buy back in the first week of January or the second week of January, right? And so a lot of folks are saying, okay, I can go ahead and buy back in before the holiday earnings come out, anything like that. And so a lot of folks go ahead and say that, right? Oli's been a stock I've been looking at very recently. This is one that shows signs of potentially dropping more, to be quite honest, right? I mean, it just didn't show any strength today. I think it's another one that everybody's down on right now. It's trying to find its long-term shareholder base, and it's not happening for that one, right? And so this one doesn't even move up here today, and I'm looking at that and I'm like, this one could very easily fall more, right? The Chef, same exact thing. The Chef didn't do anything today, right? It wasn't down, but it also wasn't up in any meaningful way, which is another one of those stocks that, a lot of folks look at and they say, hey, I'll go ahead and take my tax loss on this one, buy it back in January, and, cut my tax liability in a massive, massive way, right? And so that's when I look at it and I'm like, okay. Who's to say that one's not going to go lower here in the short term, right? Square and PayPal, two stocks I've been looking at. Two stocks that are right around their 52-week lows now. These stocks fell more. Square fell more. PayPal was hardly up today. Those are ones I think could easily fall more over the next few weeks. I mean, imagine if we get any sort of 3%, 5% pullback in the S&P 500 and the Nasdaq 100. Stocks like Square and PayPal could easily fall more. Then you, as the losses get bigger in those stocks, the tax loss harvesting can just pile up more and more over the next few weeks. So those are two I'm looking at that I think are interesting buys for the long term. That are more toward large caps, but I'm looking at them and I'm like, man, with that sort of pricing action that happened on a really green day like today, there's no telling that those stocks could fall further, right? I look at something like a Palantir, same exact thing. And the scary thing is with these stocks, the more they go down in the very, very short term, meaning over the next few days, next few weeks, the more and more folks and the more and more funds that consider tax loss harvesting in these stocks because they go down lower, they have gains, let's write those off, right? The more it goes down, the better it is for the tax loss harvesting, right? Then those folks go ahead and buy back in January. So yeah, I looked at Palantir today. I'm like, wow, that one can't even show strength on a day of, strength essentially, and a lot of strength, right? Down almost 1% Palantir today on no material news for that one. You have Fubo down. This is a pretty interesting stock for a long term, right? This one down again, 1.25% on a green day like that. That just shows there's lack of any sort of buying pressure in these stocks. And there's just overwhelming selling pressure in a lot of these stocks. With these sorts of stocks, right, like, that are moving down on a day like today, that's just overwhelm of selling pressure. When you have the indices, when you have the Nasdaq moving up nice, when you have the Russell up 2%, the Dow up 600 plus points, the S&P 500, and these sorts of stocks can't even go up, they go down, right? That just shows there's an overwhelming amount of selling pressure on these stocks right now. I mean, imagine what the losses in these stocks would have been on a day like today if the Russell was down 2%, if the Nasdaq was down 1%. If the Dow was down 600 plus points, I mean, imagine how bad it would have been for a lot of these stocks. So that's why I looked at things on a day like today, and I just wasn't as interested to be a buyer out there. And so I went ahead and I went to the sideline today in terms of my buying action, and I'm just kind of going to wait there. I'm going to see what kind of plays out here over the next few days. If we get another big drop in the market tomorrow or whenever, I will gladly be a buyer in the market. And I think it's, obviously, if we look at, a lot of this data we're looking at, right? it is absolutely the time to be a overall buyer of these stocks, especially if you haven't been a buyer and you really like these ones for the next 3, 5, 7 years, right? Really, really attractive. For me, I'm getting lower, obviously, on cash levels, right? Because I've been deploying so much in the market. So I have to be very strategic with my buying these last few weeks with lower cash levels now, because I'm putting myself in a position, especially if this market drops, more, let's say, and a lot of these small cap stocks drop more and more tax loss harvesting comings and more worries over the next few weeks. I'm going to be in a position where I'm going to be basically all in the market, which is something I don't even know the last time I was all in the market. It might have been, I don't know, probably December of 2018. It's been years since I was literally all in the market, right? And shoot, I'm under 5% cash now, so I could easily be all in by the end of December, right? And so, yeah, and then basically after that time, it's just, I'm just holding everything, and I'm holding on and trying to make it through the hurricane. And as things, these stocks start to prosper and pop and things like that, obviously I'll thrive. But it's kind of like you have to play this kind of waiting game, right? And so that's why I'm trying to be really, really strategic with kind of this last money deployed over the next few weeks out there. Okay. So anyways, hope you guys enjoyed this as always. Let me know what stocks you're buying out there. Much love as always. Don't forget to subscribe and have a great day.